Hello and welcome to this 1.5-hour BSI webinar celebrating the one-year publication of BS 8632 Natural Capital Accounting for Organisations. I'm Jasnam Chan, the Lead Standards Development Manager for Environmental Sustainability Committees at BSI and Committee Manager to the newly formed BSI Committee on Assessing and Valuing Natural Capital, which is the committee responsible for the continued development of BS 8632, as well as supporting the development of other relevant international, European or national standards where natural capital assessment and valuation input is required. This committee also ensures its standards development activities are supportive and complementary of external natural capital assessment initiatives. Today, we'll be hearing from some incredible speakers who have either been involved in the development of BS 8632 or who have applied the natural capital accounting standard in their organisation. We'll be learning about the background of developing a natural capital accounting standard, hearing case studies of organisations who've applied it and what they've learned, and finally looking at what's next for BS 8632. But first, some housekeeping. Due to the number of participants, this is a listen-only recorded webinar and your microphones and videos have been disabled. Thank you to those who have submitted your questions beforehand. If you have any questions during the webinar, please use the Q&A function located on the side panel. We shall try to respond to as many as we can at the end. Any questions that we do not have time to get through during the webinar, we'll answer afterwards and release a question and answer document in due course. If you are experiencing technical difficulties, you can also submit your issue in the Q&A function and a member of our team will assist you. Once you complete the feedback survey, we'll forward you the presentations, recording and Q&A document. This is a CPD recognised webinar, and if you wish to request a certificate, please do so when you complete the feedback survey. Go to the next slide, please. It is my pleasure to introduce our panellists for today, and I'd like to invite them to turn on their cameras while we do the introductions. So our first panellist is Ece Ozdemiroglu, who is the founding director of economics for the environment consultancy FTech. She is an environmental economist specialising in natural capital accounting. Her work spans many sectors, including farming, forestry and water. Ece is also a member of the ISO Climate Change Committee focusing on adaptation and committee chair to the BSI Committee on Assessing and Valuing Natural Capital. Welcome, Ece. Dr. Stephanie Heim is the Managing Director of Little Blue Research, which is a consultancy that helps companies understand their environmental and social impacts. She is an experienced sustainability professional with an in-depth knowledge of environmental economics and social impact analysis and their application for decision-making. Stephanie is part of the Capitals Coalition Advisory Board and a member of the BSI Committee on Assessing and Valuing Natural Capital. Welcome, Stephanie. Miranda Cooper is the Conservation and Land Manager for the Northumbrian Water Group. She manages 2,900 hectares for Northumbrian Water Group, working to enhance the holding for its conservation value. She leads a team providing expert ecological advice on projects and incorporating requirements such as biodiversity net gain. Miranda led on the project to produce the company's corporate natural capital accounts, working with the consultancy FTech, and is now working with others to see how the learnings from that can be used to inform decision making and to demonstrate the value created by Northumbrian Water for society, the economy and the environment. Based in the Essex and Suffolk water operating area, Miranda started her career with the business in 1996, working in water treatment before moving on to roles focused on the environment and conservation. Welcome, Miranda. Monica Kiss is an environmental manager for Transport for London with more than 10 years experience in the transport sector. She has a master's in environmental management for business from Cranfield University and is a chartered environmentalist and full member of IEMA. Monica was involved in various construction schemes throughout the years, ranging from small to medium scale embankment stabilisation projects to large scale ones such as the Bond Street, Tottenham Court Road, station upgrade, Bakerloo Line link and Northern Line extension. After coming back from maternity leave in 2021, she is working in the strategic environment team at TfL with particular focus on climate change adaptation and green infrastructure. In the last year, Monica was leading on the development of the first pan-TfL natural capital account, with the aim of embedding it into the organisation's management processes and maximising the benefits that TfL's natural capital delivers. She is keen to integrate this new concept to the decision-making process and raise awareness about its importance. Welcome, Monica. And last but by no means least, we are joined by Ria Bakshi. Ria is a sustainability and impact valuation specialist with more than 10 years experience in the area of sustainability strategy, reporting, assurance, and multi-capital accounting. She has a master's in environment and development from the Indian Institute of Forest Management and is currently leading the Finance for Sustainability team in Olam Food Ingredients, Singapore, which is uniquely set up in the finance function. Her work takes the concept of sustainability measurement to an elevated level by measurement of non-financial capitals, such as natural capital, for better decision-making and their contribution towards long-term value. Her aim is to institutionalise an integrated approach towards risk and opportunity and ensuring the non-financial capitals form part of business decisions. Ria has been presenting on natural capital accounting at several national and international seminars and workshops. So thank you to all our panellists for joining us today and sharing your wealth of experience with us. Next slide, please. So to those who may not be as familiar with standards development and BSI, I'll give a brief background. BSI is the world's first national standards body. Within BSI, there are a number of national committees that focus on specific topics of standardization. These committees are made up of various voluntary experts who come together to develop standards. Committee members include representatives from consumer bodies, professional institutions, government departments, trade associations, and of course, the standards users themselves. As well as developing UK standards, BSI is also responsible for the UK input into developing European and international standards. BSI, together with its group companies, also offer a broad portfolio of business solutions other than this NSB activity that help businesses worldwide to improve results through standards-based best practice, such as certification, self-assessment tools, software training, and this offering is separate to the standard side of the business. So what makes a standard? There are different categories of standards, such as terminology, guidance, or in the case of the natural capital accounting standard, specification. And the type of standards created depends on the needs of the subject area and user group, but generally, all standards are developed by experts on a voluntary basis, are written by the people that use them, are developed using a consensus-based approach, and comments from all stakeholders are taken into account. They document best practice, are designed to be voluntary, so conformance is not mandated, and are a repeatable way of doing something. Once standards are published, they are then sold in the UK on the BSI shop. So this demonstrates how BSI fits in with a wider context of private and international standards. BSI, as a UK national standards body, manages all national, European and international standards input for the UK. Once sponsored or national standards are developed, they have the option to be used as a base document for European or international standards if relevant or applicable. BS 8632 was developed in BSI as a national standard. The drafting panel that created the standard then formed the National Committee for Assessing and Valuing Natural Capital, which is called SES 18. And we'll be hearing about the future of this committee and the standard a bit later on. But first, I'd like to introduce Etche, who will be taking you through the background of this standard.
Thank you very much, Jasnam. And good morning, everybody. I'm delighted to be here. Almost 13 months to the date of its publication. And the standard had taken 2 years previously to put together. And I'm particularly delighted to be able to showcase 3 of the leading examples of its application. My job this morning is to introduce the standard in terms of why it came about, how the standard was prepared, and what it contains and aims to achieve. And then I'll hand over to our case study examples. Organizations are really good at understanding several of the capitals on which they depend. They measure the physical capital they have, their desks, their machinery, the infrastructure. They know about their labor force. They, of course, know about their financial capital. And financial accounting is a very powerful tool to understand those capitals, how they depreciate, so that organizations are ready to replenish those capitals, and they have the necessary resources to do so. Organizations, many of them, most of them, maybe all of them, depending on your position, depend on natural capital as well, but they're not as good at measuring, assessing, and valuing natural capital. That's because we have for too long assumed nature is freely available or it's endlessly substitutable by some human-made alternative, or when it runs out somewhere, we will just simply move somewhere else. That assumption is not tenable anymore. We know that nature is not really free. It's not endlessly substitutable. It's not self-maintaining when we push its ability to maintain itself by overpollution and exploitation. And it's not just somebody else's responsibility to look after it, but actually it makes financial sense for organizations to maintain the natural capital on which they depend. There are many drivers for that, because consumers demand different companies, different ways of producing goods and services. Public policy is becoming more choosy about where public money should go and how to encourage private investment into nature. And even finance world is changing rapidly, not only trying to green finance, but also finance green actions. And all of this needs new ways and new understanding of what nature means. So not seeing nature or environment as a regulatory risk or cost anymore, but something that we can invest in so that we can all enjoy the benefits of it or continue to enjoy the benefits of it. So it's about sustainability of all aspects of our life. However, nature is complex, so are organizations. So one size fits all approaches are not possible. Are not recommended, even if you're told they're possible, so that there needs to be approaches that are context specific, location and organization specific, decision specific. So they need to be bespoke. But for those applications to understanding natural capital and our impacts of and dependencies on it, for those to be meaningful, they also need to be comparable. So the task for the panel for this standard was to create a standard for natural capital accounting that could be flexible enough for bespoke applications, but comparable across those applications. So we tried to create a principles-based standard that was flexible, but made the user accountable for their data, for their assumptions, gaps, and decisions. So a panel of experts put this together. As Jasnam said, we're now a committee as well, but these weren't the only people, organizations involved in the preparing of the standard. We had a user survey at the beginning of the process, and we had 2 extensive public consultation rounds, through which we've received hundreds of comments. And also we worked with the team behind the United Nations System of Environmental Economics Accounting for natural capital accounting at the country level. And so that we aim to align our definitions with theirs and our principles with theirs. But of course, UNCIA is for countries and this standard is for companies, and there are differences in application. So what is natural capital accounting? I said nature and organizations are complex, so the information we need to use to assess and value natural capital is also complex, and it's also multidisciplinary. So it requires each of us to learn to work with different types of data and different language. Accounting is there to make things a little easier. It's a systematic way of compiling environmental, socioeconomic, financial, and other data, and presenting all this data and what it means for decision makers in formats that are familiar to them. And what's more familiar to a decision maker in an organization than a financial account? It has 400 years of history, so we wanted to benefit from that history and familiarity, and mimicked the natural capital accounting outputs on financial accounts. One such output is natural capital income statement, or previously known as environmental profit and loss account. It shows the positive and negative impacts of the operations of an organization or operations of its value chain that's attributable to the organization during the previous financial year. It records performance to date, like a financial profit and loss account would do. Natural capital balance sheet shows the dependencies of the organization on natural capital assets. It shows what assets the company owns, operates, or depends on, even if it doesn't own them, and what its value chain depends on. And it shows the benefits those assets provide, the asset value, both to the organization, but also to the rest of the society. And it also shows the liabilities, and liabilities are defined slightly differently here. They are about what the organization are legally or voluntarily obliged to do in terms of maintaining the quality and quantity of natural capital assets they depend on. So a balance sheet projects future asset values and liabilities from today to the lifetime of the asset and or organization, whatever is more relevant. So both of these also speak to each other like their financial counterparts do. So the bottom line of the natural capital income statement should be included in the balance sheet. So if you like, at the end of the year, if we've created net gain, so we have a natural capital surplus, then it adds to the natural capital asset base that we depend on. But if we behaved in a way that the bottom line of at the end of the year is negative, so we deteriorated the natural capital assets more than we enhanced them, then we should show them as loss of the natural capital base on which our organization depends. The accounts don't tell you what to do to maintain the natural capital accounts, just like financial accounts don't, but the accounts make a business case, or intended to make a business case, for investing in natural capital maintenance. So what's the standard? The standard is a oh, sorry, did I go back up? Sorry, it's a very sensitive thing. The standard is principles-based. It's flexible for application, as I said, but it demands clear documentation so the comparability can be possible. It doesn't tell you exactly what to do. It's not a guidance document. It's not a calculator of natural values, because we don't really believe that's possible, because nature is complex and location and context specific. It also doesn't give you a list of preferred tools and approaches, because these things change so fast, and definitely faster than a standard can be revised and updated. But it does tell you about how to put all this information together, and the good practice process of pulling the information together to create the natural capital accounting outputs that I've just summarized. It can be used in any way that you like for internal decision making for the organization or external reporting. It can help organizations support their engagement with other initiatives like TCFD, TNFD, and various sustainability or financial reporting requirements that are coming down in the pipeline. It's voluntary to use. There isn't yet a well-developed auditing or verification process or a market out there, but these markets develop around standards, and the standard process can be used to do its own auditing and verification as well. Oh, that's a bit of a double. So the standard has 7 sorry, there's something going wrong with these slides. The standard has 7 clauses. The most important thing is that it has principles, and I think that slide we just lost in the latest edit. That's why I'm getting confused here, but I'll tell you about them myself. The principles are very important, as I said, and they are about the rigorous choice and analysis of data, completeness of data, and not just for natural capital, but its benefits in terms of social, human capitals as well. It's about making consistent assumptions about methods, data, and understanding of where the gaps are, and credibility of the approach that the preparer follows, and making sure that the scope of the account is defensible and the preparer is accountable for that defense, because you can scope accounts in a way to make organizations look in a certain light. Accounting, the standard has documentation requirements to avoid that. The two most important clauses of the standard are clause 6 and 7, really. 6 gives us an understanding of what the process should be. And the process starts with identifying the purpose of the accounts. Because accounting is flexible, it needs to be very clear what decisions it is being produced to support. Because it's a multidisciplinary endeavor, it's very important that you involve stakeholders internally and externally into the accounting preparation process, and that includes experts but also decision makers. Because the scope could potentially be so large, the standard encourages the organizations to think about what's material. But we follow the double materiality principle. So what's material for the decisions of the operations of the organization, but also what's material for nature. And the next step is, having made decisions and agreements about the purpose, involvement of stakeholders, and what's material, then selecting which accounting output, whether it be income statement, balance sheet, or both, will be produced, and collecting data to populate those accounting structures, and then making sure that not only the income statement and balance sheet that I showed some examples of in the previous slides to be presented, but also all the supporting schedules to be available too. Because we firmly believe that it's not the bottom line that matters the most, but it's the process of putting these accounts together. So involving stakeholders in every step of the way, and we'll see many examples of that in the case studies. As I said, documentation is very important. This is how we can make sure that the account is used properly, accounting process is used properly, and it has integrity and it has comparability. And clause 7 will tell you what to document, how to say what's included in your accounts, what's not included in the accounts and why not, and what is the implication of exclusion on the interpretation of the account, so that we can avoid the risk of, for want of a better term, greenwash through the accounting process. And it also gives guidance on how to interpret the results, both of the income statement, balance sheet, but also reading natural capital accounts alongside financial accounts and other reporting requirements as well. So why do natural capital accounting? Our 3 guests are much better placed than me to tell you why they've done it, and the companies like that might be considering it. But what we've learned over the preparation of the standard and the experience that went on before it is that organizations want to understand the impacts and dependencies on natural capital, because it could help them prepare better for the risks and opportunities ahead and make them more not only profitable but more resilient, and also being used to identify priorities for investment in nature, natural capital, and making a business case to make that investment worthwhile. And now it has all frozen. Perhaps my colleagues at the BSI can take control of the slides now and progress me to the next one, because it's the most interesting one where I get to introduce the case studies. Is that possible? Sorry, I can't hear. Okay, there it is. Sorry, I think there's a bit of a delay on my end. Sorry, these technical glitches happen. I'm glad they're happening with me rather than with our guests. So, okay, so our three case studies are Northumbrian Water, Transport for London, and Olam Food Ingredients. They have applied the natural capital account for their organizations, and they give a nice spectrum of organizations for us, from private companies that are from private and public companies based in the UK, and a private company internationally, and they cover three sectors: water, wastewater management, infrastructure provision, and food supply and manufacture, and also cover the spectrum of the assets, so covering own assets, but also covering the value chain. So I'm very excited to hear about their experiences, and we start with Northumbrian Water, and Miranda. Over to you.
Thank you very much. So I'm really, it's really great to be able to share with you the why we did a natural capital account. And I was just going to go into a bit of detail on the approach we took and why we used the British standard. Just to flag to you, you can probably guess from my job title that I am not an economist. Just a bit of background about Northumbrian Water. So as Etche said, we are a water and a wastewater company up in the north of England. We provide both of those functions. And down in the Essex and Suffolk Water, where I am actually based, we're a water-only company. We own approximately 8,500 hectares of land, which makes us a relatively small landowner in the water industry. But of this, over 20% of the land is designated as sites of special scientific interest. So it's of really high value for wildlife. To fulfill our role of providing water and wastewater services, we completely rely on natural capital. We take huge pride in our environmental credentials, from the work we do on water efficiency, the work we're doing to become net zero, our approach to capital projects. And actually just this morning, we found out that we've retained the ranking of 4-star from the Environment Agency after their annual assessment of our environmental performance, which is, you know, a huge thing for us to be able to do. We definitely know that we need to look after the environment both now and into the future. And the pictures on this slide show just a small selection of some of the sites that we're privileged to own and manage, and the intrinsic value of these sites is huge. We've been demonstrating qualitatively the ecosystem services provided by our key land holdings for a number of years, and so carrying out a natural capital account felt like the logical thing to do to turn that into a quantitative account. We really wanted to better understand the value that is derived from the way in which we manage our natural capital assets, and to gain an understanding of the benefits that are generated for our customers and for wider society. We also had a reasonable amount of data. We've got good information on visitor numbers to some of the sites that we manage directly and where we work in partnership with others. We've got good data on volunteer and recreational activities, and we had also recently undertaken an assessment of the biodiversity value of our landholding before we decided to do a natural capital account. We were aware that natural capital accounting is an area of growing interest in the water industry as a whole, and we really wanted to understand the process. The metrics involved how the information can then be used. And we wanted to see how we could use the data that we currently have, as well as understand where we might need to do more work in the future to make it more robust. We wanted to develop a baseline from which we can monitor change so that we can report on the value of our landholding, both in terms of biodiversity, but also the other public benefits that we're generating from the way in which we manage that land. As I said, we had already done a lot of work looking at the ecosystem services provided by our landholding, and taking that into a financial account seemed like the next thing to do. I really wanted us to have better information and data on that bigger picture to help us look differently at the decisions that we make about how we use our landholding and how we inform our decision making for future investment. It certainly wasn't that we were doing anything wrong before, but with increasing demands on that landholding, so there's demands for development of solar, additional recreation resources, even sales of the land, and now biodiversity net gain. It's really important that we have got a consistent way of assessing the public value created by our investments, and having a standard way of providing the broader picture and of costs and benefits. So let me now move on to the how. We decided to start with our Essex and Suffolk Water operating area. It's considerably smaller than our landholding up in the northeast, and I know it much better. Both of these things were in its advantage. But once we had completed the account for the Northumbrian Water region, for the Essex and Suffolk Water region, we did then do the account for Northumbrian Water area. So we have now covered all of our operations. For both of these, we worked alongside the consultancy FTEC. As I said earlier, I am not an economist, and having an expert guide us through the process, explain why we were doing things and correct the inevitable mistakes was invaluable. It was really important that we were involved in the detail of the work, and it wasn't something that was done to us, and FTEC were really happy to work with us in that way. We had to involve quite a lot of teams from around the company to get the right data, as it wasn't always data that is currently used for our corporate reporting. We also spoke to our tenants to get information on things like their livestock numbers, and our finance team were fundamental in providing the correct costing information. Being a landowner, looking at our holding was a starting point, and we developed a natural capital asset register. You can see from the pie charts on the screen what this then looked like. And as expected, for both of the areas, the largest part of our landholding is freshwater. The Northumbrian Water account is on the right, and you can see there the second largest landholding is grassland, and it's arable on the left for the Essex and Suffolk Water region, and that really just reflects the difference in land use regionally. We then considered what benefits are realised from these assets, and which of those we could apply a monetary value to. There are some material benefits that we haven't measured. They were either too hard to quantify, or we had insufficient evidence to put a value on them. So things like water quality and flood risk management, both of which are really key issues for us, but it's an acknowledgement that we need to do more in future. Looking at those benefits alongside the costs of maintaining the assets then gives us our natural capital balance sheet. I'm happy to say that the total costs are outweighed by the total benefits, and that there is substantial net asset value for wider society. It's not particularly clear on the slide, but you can see that there's huge value created by the welfare value of recreational visits to our sites, and also the avoided medical costs. One of the really important outputs of the work for us was enabling us to look at how the public value is split between our customers and wider society. The wider benefits, which are shown in purple, include things like carbon sequestration, which is considered to be a global benefit. In the Essex and Suffolk Water region, there is a greater proportion of the value going to the wider public, as one of our key reservoir sites isn't actually in our supply area, so a large amount of the people enjoying the recreational benefits of that site are not our customers, which is obviously fine, but it's still great to be able to demonstrate to our customers how their money is being spent. And this work really does enable us to clearly demonstrate the added value that we're providing to our customers, which really wasn't something that was being measured or captured in any formal way. When we started our natural capital accounts, the British standard didn't exist. Indeed, it was finalised as we were nearing the end of our process. We saw that as a great opportunity to check what we had done against the standard. Why did the standard matter? Well, for us, it added that additional rigour to the process, that checking that what we had done was compatible with that, provided with that approved standard. It provided assurance to my colleagues that we hadn't just dreamt up a process and run with it, that it is consistent with the requirements of the standard. It did mean that we made some alterations to the final report. Mainly this was around providing additional clarity, where those of us involved in the work might have known what we'd meant or exactly what we'd done. We found that in places the knowledge wasn't then transferred into the report. Hopefully that will mean that the report is more understandable to others. It was also really helpful for adding into the "what do we need to do next" box, as it highlighted additional areas where we need to do some more work in future. So to try and summarise the why and the how, it was a new way for us of linking together data from the environment with financial data. We wanted to do something that gave us the tools to change some of our existing practices. We intend embedding the processes into our corporate reporting, and we are already implementing changes in our investment decision-making processes. And we've got a project underway to pull together a land use strategy, changing the way in which we consider and value the land holding that we've got. And all of these issues are becoming more and more important within the water industry as a whole, and also to our regulators. Our executive leadership were always very supportive of this work being done, learning more about the natural capital accounting and understanding what we can do with the information we have collected. Being able to demonstrate the value generated to our customers and wider society from the way in which we manage our holding is something we've not been able to do before. We're really happy that our account was able to be assessed against the new British standard on natural capital accounting, one of the first that was. Having that assessment carried out definitely gives more weight to this report. It was our first natural capital account, and it was really helpful to pull out the additional work we can do to ensure that future accounts are more robust. We need to improve the accuracy of some of the values we used and understand what additional data we should be including. We need to develop a standardised way of collecting and collating all of this information, including the associated financial information, so that we can ensure that we can directly repeat and compare in future years. It would be great to see a consistent approach within the water industry, not so that accounts can be compared, as we all have a different landholding, but so that collectively we can develop the best approach to valuing aspects such as raw water reservoirs, which combine both natural and manufactured assets. We are a business that takes a long-term view. We know we need to face the challenges that climate change and biodiversity crises are bringing. It's great that our customers support us in investing in the natural environment, and indeed see that as a critical part of our role. I believe that robust natural capital accounting will help us to look at the data that we have differently, ask new questions, and use the information to make the best decisions regarding future investments. Thank you very much for listening, and it's my great pleasure to now be able to hand over to Monica Kiss from the Transport for London.
Thank you very much, Miranda. Good morning, everyone. I'm very pleased to be here to share our experience about the development of our natural capital account. So firstly, a little bit of background into TfL. We, as an integrated transport authority, we manage and operate a wide range of London's transport network, and we are also responsible for developing the Mayor's transport strategy that applies to all London transport. We directly operate a range of London's transport networks, including London Underground, 5% of London's roads, Dial-a-Ride, and the Victoria Coach Station. We also have contracted services, which include buses, overground trains, the recently opened Elizabeth Line, DLR, trams, cycle hire, and airline. And we also license or regulate taxi and private hire and river services. We have 457 train stations, 764 kilometers of track connecting across the network, 675 bus routes with approximately 9,000 buses. We have a large landholding, approximately 3,400 hectares and 3,000 tenanted properties. TfL directly employs approximately 27,000 people within the organization. We do play a key role in shaping what life is like in the capital, helping to realize the mayor's vision for a city for all Londoners that is safer, fairer, greener, and healthier. Therefore, our vision is to be a strong green heartbeat for London. Working with nature and delivering ecological enhancements through relevant schemes have always been important to us. Requirements of nature conservation have been set out in our management system, and projects, maintenance, and operational activities had to take those requirements into consideration. Natural capital accounting is about understanding the value of the natural assets that an organization owns, manages, or depends on over a future period of time. Within CFL, our purpose was to develop a better understanding of the value of our natural capital and see how this approach can actually support our strategies and plans. This assessment also helps make environmental values more visible to understand where we should focus our attention, especially in this rather resource and financially limited climate. Additionally, mayoral and other requirements require us to monitor and report on natural assets. Plus, due to the climate and ecological crisis, we must improve our understanding of nature around us and change the way we manage business. In preparation for future requirements, such as the Task Force for Nature-related Financial Disclosure, this exercise is absolutely vital, and the assessment was getting actually us ready for the future, where we actually have to account for what we do in much more of a broader sense. The development of the natural capital account followed the Natural Capital Protocol, as well as the British Standard 8632, for understanding and tracking the value of our natural assets. The accounting process analyzed spatial and other data available from the organization and externally to investigate the materiality and the value of several benefits for consideration in TfL management processes. We appointed WSP and then also FTEC to guide us through this process. The whole project was split into two phases. First part of last year, before the standard was even published, we started following the Natural Capital Protocol, and we identified our purpose of conducting this assessment and set our objective. Our objective was that we as an organization are aiming to incorporate natural capital into asset strategy and project lifecycle decision-making to improve business performance, reduce business risk, and deliver better environmental outcomes on schemes for the benefit of Londoners and the UK as a whole. We consulted with a wide range of stakeholders from the business, from engineers to asset managers, through our health and safety and environmental teams and city planning teams, to identify the scope of the account and set clear boundaries for this assessment. We carried out a materiality assessment to understand what is directly material to us as a business and what we depend on and responsible for. As a result of that assessment, the final material benefits included in this assessment was air quality regulation, carbon sequestration, flood risk and water management, recreation, physical health, volunteering, biodiversity, visual screening, shading and cooling, mental health, and education. In terms of the scope, we said that projects, maintenance, and operational activities would form the initial base of this assessment. And we were absolutely clear that we only look at what is directly impacting our physical attributes of the land we own, and excluded the supplier's impacts outside of TfL boundaries. In November last year, we then started working with colleagues from FTEC as well as WSP to fully complete the assessment and started measuring and valuing our natural assets. So as well as the Natural Capital Protocol, of course, the British Standard at that point provided a very clear specifications and guidance on the process of preparing the natural capital account. The key questions we used to outline the natural capital account were centered around our land holdings and looked at our data internally, and we focused on the benefits these natural assets produce and to whom they accrue. We gathered the cost of vegetation maintenance contracts and looked at the net impact on natural capital. As a result of the assessment, we have a natural capital assets register detailing the type and the condition of our natural assets. It's worth noting that natural capital represents 27% of our total land holdings. We have also developed a risk register. We looked at the schedule of maintenance cost, and ultimately we ended up with a natural capital balance sheet detailing the benefits over time versus the liabilities, so the sum of maintaining our natural assets. So where we got to? We have now our baseline natural capital account, including a balance sheet, asset register, risk register. Key assets such as grassland, woodland, and scrub, which drive several benefits, and the estate biodiversity unit score should be included in the organizational asset register because they have material value to TfL and they should be managed accordingly. The same applies to our risks in the natural capital risk register, such as changes to public access or visual screening. They should be also included in our TfL organizational risk management processes. Considerable caution is required in interpreting the final balance sheet values because only a subset of benefits could be captured in monetary terms in this account. This will improve with better data availability and as further evidence is gathered. Overall, we can say that our natural capital assets provide significant value to Londoners and global society. The approach was also trialed on a live construction project and indicated how ecosystem services were actually improved from the initial design to the one we are implementing right now. While several material benefits were not fully captured in the account values, the analysis has identified indicators that can help TfL identify further opportunities, manage synergies, and trade-offs between different benefits from our natural capital assets. So, for example, biodiversity, the account presents the total biodiversity units we have on our estate, taken from the initial baseline study from 2018. Our estate has potential value and an opportunity for enhancing biodiversity value for delivering biodiversity net gain, either on our land or looking at offsets for other organizations. It's very important to highlight that this was our very first attempt at looking at and developing a baseline natural capital account, and we identified several data gaps we need to improve on. As a next step, we do explore opportunities to maximize overall value of benefits provided by the estate, and more specifically, the proportion of financial benefit that accrues directly to us as an organization from our natural capital. So these key opportunities could include the commercial development portfolio. They can play a key role in recognizing greater financial savings directly to TfL from enhancing green infrastructure on residential schemes where there are cost savings that could be captured. We are currently at the start of the application stage, so we are looking at how the findings in our natural capital account and during the whole process can be embedded into our project management and operational maintenance processes and requirements. This is only a start of a long journey, and we need to change the way we consider natural assets in our decision making, and also need to change the culture within TfL of talking only about carbon and really realize and raise awareness how our natural assets can provide a wide range of benefits and also they will help reach our long-term goals to become a zero carbon city. Thank you very much. And now I'm gonna hand over to Ria.
Hi, thank you so much, Monica, and thank you, BSI, for inviting me. So I'm Ria Bakshi, leading the Finance for Sustainability department in Olam Food Ingredients. So a brief snapshot of Olam Food Ingredients first. So Olam Food Ingredients is a global leader and a provider of good food, beverage ingredients and solutions. And we are working with more than 2.6 million farmers and having 100 manufacturing facilities. And as you can see from our sourcing, like 420,000 farmers getting sustainability support in 48 countries, and the scale of operations, our dependence on natural capital as well as social capital is quite huge. Also, I think a much better way of really introducing you to Olam Food Ingredients is that 1 in 5 chocolate bars consumed globally use our cocoa beans and products. Or the coffee beans we supply annually can provide around 90 billion cups of coffee, and so on and so forth. So why I want to really bring these up is that this is how we are really benefiting from nature, from the social, the community and farmers. But it's also important for us is really to understand that how much our financial capital or how much our brand value or reputation is so much dependent on the other capitals, which we term as the non-financial capitals. But what I see is like the natural capital, social capital, and human capital. Of course, this particular presentation is more focused on one of the key capital on which Olam Food Ingredient depends on, and which is the natural capital. So again, I have already covered it, but the essence of why I was really going and trying to make understand about our financial capital, our customers, our products, and with our non-financial capital is that the visible value of any company, and here it's for Olam, the market cap value is 6.2 billion, but it doesn't really capture some of the invisible non-reported values. And when we say value, it can be both value enhanced or value deteriorated, and these are the externality values which we are mentioning here. So to create a value over the long term, we need to define, actively manage a broader set of drivers beyond financial capital. And why we really started, looking at natural capital, which is the focus of my presentation here, and why natural capital accounting is relevant to us, then I think there are 3 key things which comes to my mind right now. One is that more and more, I would say the wider stakeholders, be it investors or our customers, they are talking about something called as externalities, the corporate externalities. Apart from the financial world, is there other externalities which is getting generated by the way we are operating on the ground? And in case these externalities are getting internalized because of the need arising from regulatory bodies or other pressures, or the way we really look into risk and opportunities of the future, then the key question is that, do we need to change our valuation approach? Do we need to price in these externalities? And if we need to do this, we need to really make that fundamental shift in how we look at the market. And that's how, I'd say 3 years back, when Finance for Sustainability departments were set up by the CEO, Sunny Varghese, who has been 2 terms the chair of WBCSD, and Rishi Kalra, who is the CFO, who this department Finance for Sustainability report to. They were very keen to understand from a company perspective that how much is our dependency on natural capital. And these are, of course, the 4 things which are very much, I would say, very apparent, and why any company would really like to start with such an exercise to hidden cost and benefits, to really uncover these, which are not really covered in financial accounting. And apart from, of course, the impacts, there are also dependencies. And I earlier mentioned that we are quite dependent on the natural capital, and impacts are both positive and negative. And this is all more to drive the long-term value which we are generating. Of course, when we do this, and when we do any kind of modeling or any kind of accounting, The key thing is whether we are able to make better decision making. And to make that better decision making, there are two things: the risk and opportunities that really come up through these modeling exercises. And of course, as I said, the wider stakeholders for us, our customers, investors, they are now seeking much more than just outputs and looking into the impact and how we are really embedding it in our corporate strategy. They are looking for these wider ESG metrics more than just the outcomes, but really what are those impact. And at OFI, we want to go ahead and really look into how we can value these impacts and dependencies. And this is how and why we actually started our journey 3 years back. Of course, internally, why is it more relevant is because, as I said, this department, Finance for Sustainability, we report to the group CFO. So we are part of this finance function, and generally, it's more about the financial proxies, the financial data, the conventional P&L and balance sheet getting discussed in all our BRMs, the review meetings. But we really understood the need of really that we need to really bridge the gaps between sustainability impacts as well as our financial goals. And that's the very first thing, the internalizing these externalities, the impact because of the work, the good work which we are doing on the ground. And of course, there's an accountants. The accountants, the way I think somebody mentioned it before, that there is a need for, a multidisciplinary team also in the finance function. And of course, there is a skill set, but at the same time, there needs to be a mindset change. So accountants culture and mindset change to really formalize an approach to measure, quantify, and report on the long-term invisible value as well, and not just as the profit or the value that we are creating on a financial capital. And then why are we going really beyond, we know what are the, how much emissions has been creating, what is the water use or pollution or other impacts, or maybe the benefits of carbon sequestration on agroforestry. But why are we really valuing it and trying to value is because we need that common financial currency, which I think more accountants are more familiar with. Use a common language that everyone can understand, evaluate, and articulate. It's easier for also to then really understand on the investments required in different areas. So we started with this accounting for material natural capital impacts and dependencies. The word material is very important because the company, the corporates, based on their respective industry, there will be varying impacts and dependencies. But really need to know and understand which are those material impacts which can actually influence your decisions or the decisions of your external stakeholders. So when we started this journey, and as I was earlier mentioning, the why part of it, of course, the external stakeholders are really looking into it, want to understand more about the externalities. But there is also internally, we want to know what are those hotspots where we are making an impact, be it a negative impact or a positive impact, and what we can do, where we can invest more to really reduce our negative impact on the natural capital, and what we can do differently and use alternatives to really enhance the value of natural capital on which we all depend on. So this is a snapshot of what is currently covered, what we try to currently cover. Some of the valuation approaches are easier. And when I say valuation approaches, there is no right now standard way of really valuing it, but you need to understand what's the purpose you want to use this valuation for. For us, the purpose was very clear. We need to understand the externalities cost. So what is the cost of carbon, the GHG emissions? What is the externality cost of water use, especially in those drought prone or water stress areas if we are working on? Is there any tree loss, deforestation happening? And if yes, then what is that ecosystem services loss happening? Water pollution because of the fertilizers and pesticides used by the farmers. And of course, like on the others where I've mentioned the dependencies, which is equally important, soil health, pollination. And why dependencies are important? Because we are investing in it. We are paying for these dependencies. Soil health is very much important, and that's why we are working day in, day out with our farmers on the ground, that they apply the right good agriculture practices so that the soil health is maintained. So there is a lot of investment going on in this. Pollination as well. You might be aware that we are also paying for the pollination of our almond farms in California and in Australia. We are getting commercial bees to pollinate our farms. And that really shows that how much dependent we are on these ecosystem services, one of this being pollination. And we are still realizing that even if, there is no way to really buy ecosystem services, or there is no way, even if we are using commercial bees, they are not that effective because they are so worked out. They are not in their natural habitat. And that's why the finance team is like, no, we have to understand what is this value of not just impacts, but the dependencies of which we have on natural capital. And then understanding that even if we are getting commercial bees and we are not getting right production, then I think it's the time to invest in those natural habitats, invest in the ecosystem services. And that's what we are doing right now, so that our dependence on commercial bees, and which is really not really adding value, is lessened. And we are more into really creating the natural habitats so that these ecosystem services sustain. There's something I mentioned here on the operations also, because this is one for a specific BU that we started with. And the operations in Olam Food Ingredients, our operations are starting with agriculture, where we work with the third-party farmers or our own farms, then to the processing and to the transportation. And across these, there are some impacts, natural capital impacts, but we are just looking at some of our material impacts. So how we planned our pilot study for one of our business unit is we started looking at, the scoping, and one of the key takeaway, I think, is to really scope things well. And why scoping is important is because we really need to look into the key material areas, impacts and dependencies, and ensure that nothing gets missed, which is important. And we start looking at with impact and dependencies and pathways. What are those pathways? What are those impacts across that supply chain? And also really kind of mapping that, do we have that right data? And data is internal data, of course, that we capture, but also for the valuation we are dependent on a lot of secondary data as well, and studies. And do we have that as well? Doing a mapping of that. And something which we were already doing since last 2 years is really valuing our impacts and dependencies. But where BSI standard really came into picture was when we wanted to really make it real, our integrated impact statement. And BSI standard was something which was looking more into P&L, balance sheet, and the kind of thinking the BSI standard had and the thinking which our integrated impact statement had quite mirrored. And that helped us in really making it real. We're doing a valuation, but really going forward, from the valuation to really to put these numbers using the formats of P&L and balance sheet, and then trying to identify what are the risks and opportunities. So that's how the one which is, it's bold here, the P&L statement and the balance sheet came when we started working with the experts here, the external consultant, Little Blue Research, and Stephanie, who's another speaker today. And of course, the cross-functional teams where Stephanie from Little Blue Research, our team, we started working with other functions as well, the CRNS, the corporate responsibility and sustainability teams, who are actually on ground doing a lot of good work, but really want to understand what are those returns. The finance team, who really understands that, okay, this is the cost of transition, this is the the cost of low carbon, we are now putting a lot of money on renewable energy or on good agriculture practices. But now they also want to understand more from a natural capital accounting perspective, that what is that value to business, value to society getting generated, which comes from this integrated impact statement or the work we did. Integrated impact statement covers both the natural capital P&L and the natural capital balance sheet, very much in line with the BSI standard. So this is more to really explain that nothing, this work cannot happen in silo, but especially in a corporate environment from where OFI comes from. It needs to be done along with other cross-functional teams and experts and right collaborations. Then this is a snapshot of the integrated impact statement, the natural capital P&L, the profit and loss statement. And as I think the earlier speakers and the experts already mentioned how it looks like, enhancements and the deteriorations. But here, just from a OFI perspective, we of course customized it to what is meaningful to us. And for us, it was important to understand across our supply chain, agriculture, processing, transportation, what are those key impacts? What are those key dependencies? And what is their annualized? So profit and loss is a more annual statement we looked at. And then I also have here a snapshot of a balance sheet, which also looked at, and we wanted to look more from the assets perspective, which are those key natural capital assets. And this is more a forward-looking statement, which really captures that what is the value of these assets. And of course, the liabilities, or internally we have started calling as, this is more investments which we need to put into future, so that we continue to really work along with the natural capital, with the Mother Earth. So there are a lot of learnings which I wanted to actually share with you. And briefly, I think the key takeaways, first of all, I think it's important is what we started with. I'll just go to my last slide, which is a thank you slide. 3 key things. First is on the baselining. So baselining is important, that we need to understand, and we have a baseline of 2018 from where we are looking at, and now it's 2021. So we can really understand, because of different initiatives which we are taking on ground, what is the impact, what is the changes in dollar terms that's being created. Secondly, I think if you want to scale things up, we need to, of course, have some digital solutions at place. But scaling also means that we are looking into accurate pictures. So a lot on the accuracy, on the technology, that we are really getting the right footprint, especially the land use change emissions which we have in our supply chain. Are we really looking at attributing the right impact or not? And thirdly, I think it's very important to create the right partnership and collaboration. And I think that's why we all are here together, so that we can really, make this thing real, the work of natural capital accounting and coming up with our integrated impact statement. Hopefully I didn't take much time, but thank you everyone. And I now hand over to the next speaker.
Well, next speaker is all of us back on together. So thank you so much, Miranda, Monica, and Ria. Come back online. There we go. It's okay. I think it's worth taking the time. It was fascinating to hear all your practical experiences. I've got a practice-related question to start with. We get asked a lot from people who want to embark on natural capital accounting. Will I have enough data? And you covered what kind of data you had, and I heard from all 3 of you that natural capital accounting doesn't just appear out of the blue. It's part of a process that you've been working on for a long time. It's almost that it's not that you didn't have enough data, but the data wasn't getting through to the decision makers. Can you tell us a little bit, maybe we go back to Miranda, because we haven't heard from you for a while. Can you tell us a little bit about that sort of practicality of the pulling the data together and making it influence more strategic level decisions? What were the kind of things that you learned from practice?
Yeah, absolutely. I think being a landowner, obviously the critical thing for us was having sufficient data on our land holding, and we were in a fortunate position that we had carried out a biodiversity valuation of our holdings. So I'd got a very good breakdown of what different types of habitat we owned. We'd already taken that first step, I suppose, towards developing a natural capital asset register, which I think is critical. But it might be critical in my brain for a natural capital account, but I actually think it's critical for any company that owns and manages land, because otherwise you don't know what you're owning or managing. So I think that's a huge step. I'd say in terms of sort of influencing others and using others, I think it was just really valuable to bring in different people from around the organisation and to try and increase that awareness of just how important our land holding is for the future of our organisation, and how important it is that we include our knowledge on that land holding as we make decisions. Because the land's there and it's always been there, it's very easy just to see it as, oh, it's our land, we can do what we want with it, or it's our land. You wouldn't think that if you were going to go and maintain a building. You really think about it. You think about what you're going to do, how you're going to do it, and it's trying to get that same level of value embedded within the land holding. And to me, I think that's one of the huge benefits. But so for me, I suppose, being able to share our land use value information with the rest of the business is really key.
Mm-hmm. Thank you very much. Monica, can we come to you and your practical experience?
Yeah,
maybe
absolutely.
a little bit?
I mean, getting the data was one of the main challenges we faced throughout this process. TfL on its own is quite a large and complex organization, And even historically, we had differences in the way London Underground or surface transport operated, and then standards management systems they followed, and also how they actually captured the data from those activities. So one of the key challenges was around finding the data and finding sufficient and good quality data. So throughout the process, we identified several gaps we need to improve on. And now we are trying to see and prioritize those topics and see where we can actually put more resource in to improve on the data, on both on the quality and the quantity. We had issues, for example, about understanding if we have publicly accessible land on our whole estate. As you can appreciate, we as a transport authority, everything is very kind of secured and fenced off. However, we do have actually some areas that is publicly accessible, and it's important from the natural capital valuation perspective, because we can then put monetized value against the recreational and the social benefits those areas can provide. So one of the areas is we need to look at is a much more consolidated and centralized kind of data set for areas like publicly accessible land on the TfL network, or things around volunteering. We don't really have, no one really within the organization is centrally collecting that information. We have pockets of information in various places, and we do volunteering, but it's not necessarily an easily accessible data source, basically.
It's very so you doing not just finding new data, but tidying your house, and that's for own data for Monica and Miranda. And Ria, you were looking down your supply chain, which scares everybody. How was it for you?
Yeah, so luckily, I would say we have a very good, a very unique at-source platform. And at-source platform, what it does is that for each of the farmer groups, it calculates all the key footprints around, let's say, the footprints from GHG emissions, starting from the seedlings, from the fertilizer use to fertilizer production, to how we really the crop residue management, to any land use change, so emissions across it. And similarly, for the farmer group, and I'm talking about a farmer group level, the at-source does the water used during irrigation, the water used in crop residue management across the entire life cycle. And similarly, what is the area, the land use area? So for us, the data for our the way we scoped it for the farmer groups, for our at-source plus farmer groups, we had that data for those key, the GHG, water use, and the land use. So we had all that data available thanks to the at-source, and we really report that to our customers as well. What was challenging, I would say more was, when we identified that there are other areas as well which is important, like water pollution or soil health related issues, or rainfall, because we're a lot of dependent on rainfall. And we understood that, there are some data points which we can really, where we need to really capture differently, because we were really unsure how we should value soil health, how we should value rainfall, the dependencies. And even coming to water pollution, is it just fine if we just, understand that how much herbicide, pesticide, or insecticides are getting used, but is it in a different way we want it? So I would say data is massive. Data is a lot in the organization, but just finding out the right data, which we need to use so that we get something meaningful results, is what was the challenge. But yes, we worked and we came up with our first account.
Thank you. So a bit of a tidying, but a bit of like a much more mindful look at the data, as it were, in all cases. What do you need for which decisions? I just want to, before going to the next question, I want to make a comment about SMEs, because we also get asked, is this for large companies? And you are obviously large company, you're not SMEs, and you already had wealth of data at your disposal. It doesn't mean that SMEs cannot do this process, because you also all mentioned about materiality and understanding importance of data. So The standard doesn't ask any organization to do a gold-plated account. It just says, this is the process, do it as much as you can, as material as it is for you. And it is there to encourage the kind of conversations that you were having in your organization. So any organization could benefit, I think, from this process. Just a plea to the SMEs, don't be scared of it because you're not a large company that already has lots of data. The second question that I wanted to ask you, I've heard from each of you. So Miranda, you said that this has led to thinking that you need a land use strategy. Monica, you said you realized that it wasn't just about carbon for TfL. And Ria, you gave the example of, well, actually there is a natural service in terms of pollinators, not so much the commercial ones. So these are very important, it seems to me, strategic decisions for the companies. What advice would you give to others so that they can position their accounting process in a way that they can also influence similarly strategic decisions for their organizations and not necessarily use the accounting to justify the decisions that have been taken? We all know we used some tools to do that, but how can we ensure that doesn't happen with NCA? Maybe I go to Monica this time first.
Well, we are pretty much at the very kind of start of that process where we are actually looking at how we are utilizing the information we gathered throughout this process. So, of course, our aim is to use this information to influence the decision making. So whenever we are planning, let's say, a new project, initially in the feasibility stage, our sponsors they are looking at what is actually required on that scheme and how much impact that's going to have on the natural environment, and really choose the ones which would deliver more of a positive benefit and really maximize the natural capital benefits on the scheme throughout the project lifecycle. So I think, in our case, we are really looking at embedding this into our management processes. Mm-hmm. So it can be picked up early on, and it's going to influence how we actually plan, deliver, and hand over a project. And not only projects, but also operational and maintenance activities as well.
It's very encouraging. Thank you very much, Ria. Maybe next.
Yeah, okay, so I think this was more for an advice for anyone who's starting this particular journey. Okay. Yeah, so I think because from my experience, I can say, I think there are three things. One is, I think, which we just briefly mentioned, nobody wants a lot of information from you, just what's material, so that materiality assessment is important. Keep it simple. Valuation methodologies can be as tricky and as complex as possible. So try to keep it simple, depending on what purpose you're actually doing that particular valuation for. And third, be very transparent of whatever you have done. So being transparent actually gives whoever is your audience of your natural capital accounting, it gives us a chance to really ask the right questions. So I think these three things are important, which I will really advise anyone.
Thank you. Miranda.
I agree with Ria completely. The materiality assessment is vital. We had actually already done one in-house before we started this process. So again, that was information we'd already got available to us. Embedding it into the decision-making process it follows quite naturally because you've looked at these aspects that are material to you, and putting it in at the options appraisal process. That part of the process is critical to us. We've always recently considered things like carbon anyway, so it's just building on that, and it's the whole of the water industry is being pushed down the route of looking at best value rather than least cost, and it ties in many ways with that approach. I would just say quickly that when you are using it for decision making, though, it is important not to forget about the intrinsic value of things like biodiversity, which you can't put that financial cost on, and making sure that what the natural capital account demonstrates to you is the added value of how you can achieve the best added value, and making sure you don't deteriorate other aspects unintentionally.
Thank you very much. I think your dog agrees there with the importance of intrinsic value and
yeah,
that these things will never be complete. No, that's fantastic. Okay, so shall we? We are running a little bit late, and I could talk to you for hours. But shall we go back go to Stephanie now, I think, to tell us a little bit of what the future plans are, because you nicely ended your case studies as to what you're going to do next. So Stephanie can tell us what we are going to do next. And then there's a Q&A time to pick up some of the questions from the audience as well.
Fantastic, thanks for that. So could we have the next slide, please? Great, so Jasnam already introduced that the technical team behind the standard has formed a committee for valuing natural capital, and the role of that committee is really to address the feedback that we get on the standard, but also to look at technical developments over time and consider when and how that standard might need to be adapted. We're also promoting the uptake of the standard through webinars such as this one, and trying to get the community more involved in sharing best practice. One of the parts of that is looking at frequently asked questions. So some of the questions today, some of the questions that you sent in that we didn't get time to address but weren't part of the presentation, will be provided in terms of frequently asked questions about the application of the standard. So that stuff I think is kind of to be expected, but some of the really exciting developments include making a proposal for the standard to become an ISO standard and trying to get that process kicked off later this year. The other thing that the committee is really working on is being part of those consultation processes. TNFD has been mentioned both in the presentations and in some of the questions that we got originally. You know, these frameworks are under development, and what we want to make sure is that there's an alignment between all of them. So we mentioned TNFD here, and the committee as a team has commented on the first iteration of the framework. We'll be doing a second comment round before the next iteration. But there are other consultations to consider. So EFRAG is currently underway, the ISSB and sustainability reporting in general. So a number of different ways we can get involved. And obviously as part of that, if people are interested in finding out more about the committee and how to join it, then I'm sure contacting any of us on the panel today or Jasnam directly would be the way to go about it. So I'm just going to hand back to Ece now so we can do any last general Q&A.
Thank you very much, Jasnam. Over to you. Yes.
Great.
You had sight of the chat. Yeah.
Perfect. Thank you, Stephanie, for sharing what's in store for the committee and the natural capital accounting standards. The discussions today have been so interesting. I'd like to invite all panelists to turn on their cameras, which we have, and we'll launch into a very, very quick fire Q&A session to close. So Stephanie, as we're on you, so staying on the future of the committee and its engagement activities, what government engagement activities and dialogue are we seeking? What's our ask and offer?
So I think what we're trying to ensure is that we understand what's going on in the market. So as frameworks start to be released, we're contacted or made aware through the committee processes what's coming when and how. As part of that committee, we're then bringing in comments to those different processes, which is why recruitment to the committee is important. So for us, the more technical expertise we have on that committee to comment on these new consultations is great, but also it's to sort of, I guess, ensure that companies who apply the natural capital accounting standards are helped to be successful, and that means engagement with people who work in policy so that they account for all these developments before potentially moving on to the next policy, that some of these developments are included and what works practically is considered as part of those discussions.
Thank you. And Miranda, if I come quickly to you about a question on how can we quantify, for example, recreation areas offered to general public and include that in an NCA?
Sorry, I lost my unmute button for a moment there. So there are tools out there to help you do that. So where we had the data, we used the data. Where we didn't have the data for some of our sites, we used a tool called ORVAL, so Outdoor Recreation Value Tool, which was developed by the University of Exeter along with others, I believe, and I think that's a standard that we're recommended to use. So yeah, there is information out there. It's just getting the advice from the experts as to what those tools are and how to use them.
Thank you, Miranda. And Monica, longer term for TfL, will TfL be requiring significant or tier 1 supply chain partners to have an NCA embedded within their own business as well?
Wow, that's a really good question. I mean, where we are now, we developed it just for us because we need to understand what we have, what benefits our natural assets provide, what the value is, and how much it is for Londoners and global society and to us. Of course, with time, we're going to improve on our data sets, and ideally, we would like to have our suppliers to do the same. So basically, we can collaboratively work on this agenda together and really improve the natural environment and maximize the benefits from these assets, whether it's on our land or on their land while they are working for us, for example. So yeah, that's definitely a bit more kind of a longer term aspiration before we tidy up in-house what we have.
Thank you. And Ria, what impacts are the completed accounts having at board level, and how much input has come from specialists working on the ground as opposed to, say, consultants?
So the specialists working on the ground, they know the ground scenarios, but I think the way we are really powering this transition to a really nature-aligned future, the collaboration with experts and outside consultants are very much needed, because the pace is just the nature and the climate related the developments, it's just at a pace which is it's unprecedented, I would say. So that collaborations are there. And I think your first question was on what? The impact on the board?
Yes, what are the impacts on the completed accounts having at board level?
Yeah, so we have internally shared what's the draft accounts with the board, and the thing which we have done for the one of our BU. And the very first thing is that we need to scale this up. We need to scale this up, and we need to do it really on an annual basis so that we can do some comparison and make right decisions.
Perfect, thank you. And I'd like to ask each of you a very brief, quick tip. What would be your one quick tip for everyone on the call who are thinking about conducting an NCA? So if I start with Eche first.
Yeah, thank you. So I think the tip is don't fixate on numbers and data. It has to be rigorous, but it'll never be complete. And remember that people make decisions, not numbers. So use the natural capital accounting, the whole process, as a tool for communication inside and outside your company.
That's great. And Monica, if I could ask you the same.
Well, from me, I would say that it's better if you identify, reach out, convince your stakeholders first before you start the process. Because with that one, I think you can save time. So you know where the information is gonna be held, in what format, whether they are willing to contribute to this whole process. So I think it's very important to really bottom out and get buy-in from those stakeholders throughout the process, especially if you are doing it first time round and working for a rather complex and convoluted organization like us.
Thank you. And if I could ask the same to Miranda.
Yeah, I'd say, I mean, ultimately you just need to dive in and give it a go. The language is far scarier than the actual thing. I didn't have a clue what it was I was letting myself in for. I just knew we needed to do something different, which is why we asked for help. And actually, once you got into it, it was a really straightforward, logical process to work through, but I couldn't get my head around it without that external help to actually point me in the right direction. I'd looked and looked and thought, I have no idea what this means. So like I say, we went to FDEC, we got someone that could explain it in a language that I understood, and at that point it was really easy to move forward. But I think, yeah, just give it a go. It's not as frightening as it appears.
Thank you, that's very comforting to hear. And Maria, how about you?
Yeah, I think I mentioned that we just start small, but it's not easy. Natural capital valuation, it's not easy, but if you start small and if you'll embrace complexities, but I would say it's a meaningful exercise, and if you'll do it, you are then making the real shift, and that's what's needed right now, that transition to a really nature-aligned future, and really making that market, that fundamental market change is what we are looking for. So yeah, I think start small, embrace those complexities, and make the right decisions.
Thank you. And last but not least, Stephanie, what's your tip?
I think, well, first of all, I'd second everyone else's tip. And lastly, though, what I would say is focus on material issues, and also not being put off by the complexity. So simplifying where you need to. It's an iterative process. It doesn't have to be perfect the first time that you put it into practice. So that would be my tip.
Great, thank you. If we come to the last slide, we have come to the end of this session. I'd like to take this opportunity to thank all of our panelists for some great discussions and sharing your amazing insights into how the Natural Capital Accounting Standard can be applied. Thank you to the people who have attended and for submitting your questions. Those questions we didn't have time to address during the Q&A, we will answer in a post-webinar document and circulate that in due course. The Natural Capital Accounting Standard is available to buy on the BSI shop. So if you would like to know more about how to get involved in standards making and being on the committee that develops standards on assessing and valuing natural capital, please do contact me on the email displayed on screen. So thank you once again, and I hope you have a great rest of the day.
Thank you very much.
Thank you. Thanks, Justin.
Bye-bye.
Thank you, everyone. Bye.
Bye-bye.